All right, let's go traders. Let's talk about a few things today. If you're new, welcome. This is the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you become better traders. As we move into this video, we're going to start real quick right here on Solana, as it has had a magnificent run up into 2-week resistance, which is also daily res. So that's a little bit of confluence there. I did take a short on this, expecting it once it took out this swing high that it would probably have a small pullback, especially it being the weekend as well. And as you can see, there are multiple resistance levels here where price basically ping-ponged through them and dropped. So it did come back with spectacular fashion, and it is bullish. So I wouldn't suggest shorting it now after this video. I took the short roughly around the high of day, and I'm expecting it to close under that 2-week resistance level. I'm already at 21% worth of profits, so I'm going to take profits as soon as this video is over and then move my stop to break even. So let's go over here to the S&P 500. These three little lines right here are your options weekly expected range for next week. You can see we start on Monday, we end on Friday. And basically last week we only had 3.5 days worth of trading because Tuesday was the 4th of July. This thing closed pretty much on the weekly expected move for last week. And I will pull this over here real quick just to basically show you that. And it basically tagged the lower end of the expected move. And then here is next week's range. And that's what I have drawn out for you here. So yes, we did have a pullback on light volume on a holiday week. So I'm not really expecting much for next week. But what is important is the top of the range for the options expected move is right at daily resistance, which I find fantastic, as well as the bottom end of the expected move is down here close to support. Now, we do have the CPI coming in this week on Wednesday, which is July the 12th. You can see here I do not have an expectation of what the market participants would be expecting, but considering that we dropped from 5% down to 4%, I would assume that 3.6 or 3.7 would be roughly around what the expectations would be. Now, however, if you come over here to Truflation, you can see that you are much closer to the Fed's 2% target than our current actual 4%. Is this more accurate than the Fed? I find that very interesting. As of right now, the marketplace seems to be pricing in a 92.4% that we are going to see a 25 basis point rate hike. We can also go over here to the bonds, drop down to the 1 month, and you can see it is trading right around that 5.24%. And remember, Truflation has us already setting at 2.56%. So I do believe inflation is going to continue to trend lower. But getting back on track, going back to the S&P 500, I just wanted to show you what next week's range is, and it's a $58 expected move, $58 up or $58 down. But with CPI coming out, if it is lower than projected, I could definitely see us breaking out of the top edge of the next week's expected range. If we trade inside of this range again, that will look a lot more like accumulation instead of distribution, as you're just seeing a slight pullback, which is normal. You can get all the way down to the 50 and you can still be considered in an uptrend. As you can see here, once you started to consolidate in this range, the 50 did a pretty damn good job of holding price. And then boom, we got that blast off to the upside, bringing us within 7% of the old all-time highs, which is nice. So we're going to keep an eye on next week's range. If you're looking to short the market, I would wait until resistance around 44.57. If you're looking to buy, I would look to be a buyer roughly around daily support down there at the bottom end of the expected move. This is, however, only if we get a lower than expected or if we come in at expectations on the CPI number. As if we come in lower than expected with the positive jobs data that we got, even though right now the market is pricing in that high 94% probability that they are going to hike, the Fed could absolutely change their mind and not do anything. And in my opinion, that could give us a nice move to the upside. Now, moving over to Bitcoin, you can see that we do have this small trend line. That trend line was made on the line chart. Let's pull this up right there. So you can basically see it's from this point to this point. And we broke down on that Thursday. We broke down. Let's go back into the candles and see. Yeah, it was Thursday. We got the breakdown. Then Friday on non-farm payrolls, we had a small range day trading up into that trend line and closing. And then here we are today, barely moving down, testing the midpoint of that region. Why is this all weird to me? Well, let's go look at Riot, for instance. RIOT, pull that up. This is what happened on Friday with Riot. And it should have happened. Why? Well, here's what the dollar did. This is absolutely beautiful. We were wanting to see the dollar break down. We got that breakdown. Look at the retest. Beautiful. And then boom, big move to the downside here. This is what we want to see. Remember, if we could get risk assets or Euro USD moving higher, that's good. And it could help Bitcoin, because if the Euro moves higher, that would put weakness on the dollar. So it's just a matter of, do we find that demand? So let's go into Glassnode right here. Let's pull it out a little bit. Let's go year to date. You can see we had accumulation right here and basically had one pop up to the upside and then nothing. Basically traded down to sideways for a long time until we got the BlackRock news pushing us up above where you had accumulation here. So I think you're having a lot of these people that bought right in here selling on this move to the upside. And now you can see that the accumulation meter is popping up some there, right there on Thursday. You had a 0.73 and then a 0.72. So the Thursday and Friday were the highest days of accumulation that we have seen since all the way back here, which was in April. All right. So this could help go up, but we are watching something else. Also, the addresses with 10,000K or more Bitcoin in them are pulling back as price went higher. So these people here could have been the people here accumulating. So that means that as price goes up, they take profits or whatnot. And you can see that this is dropping. Now, I do not like this because 10,000 Bitcoins, these guys are whales, and the addresses are continuously dropping. That doesn't necessarily mean that they are selling their spot holdings. It just means that they are taking it off exchange, which could indicate profit taking. The dollar is now starting to get to the point to where we need it to be if Bitcoin is going to have another run to the upside. So once again, you can see here Bitcoin on Thursday had to move up, creating a fresh yearly high, and then dropped all the way down, but closed above daily support coming from this candle right here. This is last week's low. It is still intact. So if we do get downside continuation, this will be my downside target on Bitcoin. If we do break back above this, then obviously we will be looking to buy to see if we can get a move back to the upside. And if the S&P 500 or risk assets help us with that, that could be very, very good. Right now, it's looking better for the downside as it's closer to making fresh yearly lows than it is to making fresh yearly highs. And we are past the halfway point of the year. So there you go, price action analyst, killing it as always. We murdered the market last week. We're going to murder the market this week and continuing week after week forever. So if you have not hit that subscribe button yet, make sure you do so. And thank you so much if you stuck around until the end. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.